Let's start the program there by trying to work out the future of the economy, interest rates and inflation. This week, there's more evidence the global economy is teetering on the brink of recession as central banks try and head off inflation with higher interest rates. Now it's a matter of judgment about which is worse, a recession or long-term inflation. As in America, in Australia, there are signs that inflation is more than just a passing trend. It's coming as companies raise their prices to not only offset their costs, but to profit from cash-rich consumers. Edward Boyd reports.
Everywhere you seem to look, consumer prices are rising. Red meat, vegetables, petrol, electricity, household gas. One of the worst, airfares. Airlines are charging massively inflated prices, but it hasn't stopped consumer demand. The planes are full, and it's a warning sign that inflation might not disappear as quickly as the Reserve Bank hopes.
I suspect that they're going up in the order of 20-30% on the basis of the imbalance between demand and supply, in addition to the fact that unit costs of airlines have gone up tremendously over the past year.
Qantas this week said it's expecting a pre-tax profit of up to $1.3 billion this half year. It's a remarkable turnaround for an airline that's lost $7 billion since the start of the pandemic. And this quite amazing turnaround is mainly due to sharply higher ticket prices.
C factors in particular are extremely high. That's the big factor that we're seeing across the board. And you are seeing some increase in international airfares. I think it's happening worldwide because there is this lack of capacity that's out there. And the airfares have to be up because we're seeing fuel this quarter is 76% higher than it was pre-COVID. And as you know, it's still very volatile, so we have to recover that.
There is one sector, though, where prices are starting to ease: second-hand cars. A new report from Moody's shows car prices are on the way down again, and it follows the trend in America.
Yeah, so we've seen second-hand vehicle sales fall across the last 4 months in Australia. So it's actually about 10% below its peak in May earlier this year. It's still too early to say, you got a bargain, go out, buy yourself a second-hand car, but it is a really good sign that we're starting to see a normalisation come into a market that's just been so disrupted over the last couple of years.
The fall in car prices comes with an easing of supply chain pressure, plus an increase in the supply of new vehicles.
Yeah, so much of what's driving the falls that we've seen in the used car and used truck market is actually what's happening because of the new car sales. So we've seen that semiconductor shortage just throw spanners into global production over the last few years. That's starting to normalise. We're starting to see some easing of those pressures. That's allowing that global car manufacturing to ramp up. When people buy a new car, they sell their old one. That's adding to supply for used cars and finally able to meet some of that excess demand that's been there for a while.
Car prices coming down is a sign of deflation, something the Reserve Bank and the government desperately wants to see.
The global economy is treading an increasingly narrow and perilous path. That is one of the key messages from meetings that we've had through the course of yesterday and this morning as well. The number one enemy when it comes to the global economy is inflation. We've seen some very troubling outcomes for inflation in the United States released this morning, the highest core inflation in something like 40 years.
Late this week, though, it was confirmed that consumer prices in the US stubbornly refuse to fall. Headline inflation is at 40-year highs, 8.2%. Core inflation, which strips out volatile food and energy prices, jumped to 6.6%, its highest level since 1982. It means the US Federal Reserve has more work to do lifting interest rates, something that was echoed by the head of the International Monetary Fund.
We know that rising interest rates come at some cost to growth, but we also know that not tightening enough to put a leash on inflation would mean interest rates staying higher for longer, resulting in even more harm to growth and to people.
And it's a similar story for Australia. But the fact is, despite the RBA raising rates by 2.5% this year, Aussies are yet to tighten up their spending. Retail spending keeps setting fresh records, and a lot of that money is being spent on overseas holidays.
People are chomping at the bit to travel again, so we're seeing very, very strong outbound travel demand, in response to, coming out of COVID. once that wears off, once that strong incentive and desire to travel has worn off, I think that in 6 to 12 months' time, once it has worn off, what you'll see is people will start to travelling in a more uniform or normal state, and that's when you'll see them respond strongly to higher airfares.
Qantas says domestic capacity is at 94% in this current half year, while international capacity is coming back more slowly. It's currently at 61% and should reach 82% by June next year.
Inflation and interest rates haven't made a dent in people's need or desire to travel. And the research shows it's a category consumers will prioritise ahead of others. That's not to say things won't soften in the future, but based on our forward booking trends, demand keeps on strengthening.
Chatswood Toyota is one of Sydney's largest motor dealerships selling new and used vehicles, and customers are willing to pay a pretty penny.
Well, to be honest with you, used car prices are remaining pretty strong. You know, in advance of this interview, I rang 3 or 4 dealers in town, and they all said pretty much that the vehicles that are like high maintenance vehicles to run or vehicles that aren't in good condition, they're the ones that have taken a bit of a hit, but good quality cars dealers are paying top dollar for.
The impact of interest rates is slowly trickling into the used car market, but it's taking time.
It has softened a little because of the interest rate rises, but I think other than that, you know, the market's still very strong. Look, a couple of dealers did report that it's, probably off 10 or 15%, but, we haven't found that here. It's still very, very strong.
And this softening in sales is something automotive pricing experts Glasses are seeing too. But it comes after sharp price increases for more than 2 years.
Look, we've seen some extraordinary price increases on certain vehicles, some over 50%, and some 3-year-old cars were selling about 30 or 40% above their original new car price. So, it's been an extraordinary time in the market. I've been in this industry for more than 20 years, and we've never seen anything like what we've seen in the last 12 months.
Used car prices are expected to keep falling, but it will take a while.
Look, I think it's going to take at least a couple of years, Ed. I don't see it them falling off a cliff at any time soon. I would still be very confident about buying a used car over the next 6 to 12 months as supply constraints still there. I don't expect that they'll fall off a cliff at all. Having said that, if we enter into a recession or if interest rate rises continue to occur, then that will put pressure on prices as well.
And it's the same story at Moody's Analytics, prices to gradually fall as the market starts to normalise.
We expect it to keep falling, and that largely comes back to that new car sales and production ramping up. So we should see prices fall through the rest of this year. What'll be interesting to see, though, is how that differs between cars. Given where oil prices are at the moment, we've had that shock. We're starting to see some signs that it might be starting to lift again. We could see people move more towards those smaller cars, more of those energy-efficient cars, and that'll come at the expense of those big gas guzzlers, SUVs, four-wheel drives, that type of thing.
Toyota's still experiencing high demand for SUVs, and it can take a while for a new car to be delivered to the customer.
Well, look, I'm a Toyota dealer, so, Toyota's number one in the marketplace, so most of our models, in fact, all of our models are in high demand. But you could safely say that, vehicles like SUVs and four-wheel drive, they're still commanding pretty strong prices, when we're purchasing or trading them.
But as for airfares, expect to be paying high prices for at least the next 8 months.
I'd say at least 8 to 12 months. You've also got interest rates in the mix as well, putting downward pressure on airline demand. And I agree with you, once people have got that first trip post-COVID out of the way, and then they start making decisions in a more normalised world where you've got very strong inflationary pressures, you've got low wage growth, you've got a very, very weak Aussie dollar, which is putting up the price of goods and services when they arrive overseas. All of those things combined will lead to a reduction in air travel in 6 to 12 months.